I do want to pivot to a more broad conversation, bring in our next guest joining us this morning, Eddie Ghabour, owner of Key Advisors Wealth Management. Eddie, always great to have you with us. I'd love to just kick things off with your thoughts on the market action we've seen so far this week.
So I think it's very positive developments we've had. We've kind of been in a downward trend for the last 3.5 weeks. And then last week, we got a major pivot from the Fed. You saw the probability of a rate cut really start to increase substantially. And that's when the market started to look like it was going to bottom. And now coming into this week, one of the biggest developments, in our opinion, is the fact that it looks like Bitcoin has bottomed as well, too. And some may not agree with this, but we believe Bitcoin many times front runs the tech trade. So a lot of AI names took a big hit over the last few weeks, and now it looks like they're going to be bottoming here, and I think it's back to a risk-on market. So you're starting to see some of the defensive areas that money was flowing to over the last 3 weeks. They've now started to unwind and going back in to higher risk and higher beta plays. So we believe that we'll be still choppy this week and next week as we head into the Fed. We're buying those dips with whatever money market cash we have left for clients, because we think the last 2 weeks of December should set up to be really strong. In first quarter 2026 looks fantastic in our opinion as well.
All right, Eddie, so if Bitcoin's bottom is set here, does that create a bullish setup for the broader tech trade? Because we have seen that under pressure. As I'm looking at the NASDAQ, it's our only index in the red right now.
It absolutely does, and I think that's what you're going to see, And so the next thing that we really want to see look like it's going to bottom and start making new highs is Nvidia. That is the most important name in tech, in our opinion, because of its weighting in the S&P 500 and the NASDAQ 100. So because Bitcoin looks like it has bottomed, we think Nvidia will be next in regards to showing its positive momentum. And I would anticipate by next week, you'll start to hear people talk about the AI trade again, because I think you're going to see the tech trade really start to gain steam here, so that way we can finish strong and get that Santa Claus rally we all hope to see.
And you mentioned next week. The other thing I think everyone will be talking about is the Fed. We've got the FOMC meeting. We're going to get that rate cut decision. I'm just refreshing my CME tool. You're pretty much baked in at this point. But as far as what you're expecting, a lot of, because it's already priced in, a lot of the conversation now is more about what is going to be said and what the tone is, and sort of what's your expectation there, and also what do you think the market response will be?
I think the market will sell off on Powell's press conference, because I don't think he's going to come across as dovish as the market would like, because you're right. The rate cut is already baked in. I can't imagine a scenario where they surprise us and don't cut. So I think that's a given. But I think he'll be a little bit hawkish in his tone by saying the same thing he said last time, where January, there's no guarantee. They're going to look at the data. But remember, we're also going to get President Trump is going to announce a new head of the Fed probably before the end of the year. And I believe that will be looked at as a very positive light from the market. So they'll look through what Chairman Powell says, in our opinion. So this is why we want dry powder for next week, because I expect it to be a very choppy day, but also a very good opportunity if we get the volatility to the downside we expect, to kind of get that last tranche of money in and get ourselves set up for the next few months.
So if you expect a post-Fed dip here, should investors be keeping some cash on the sidelines here? And how meaningful of a pullback does there have to be for someone to step in?
I don't think it's going to be a meaningful pullback. We just saw that, and I think that was the opportunity. So the way we manage money is we're very tactical in nature. So we will raise cash when we feel like there's an air pocket or a bearish trend, which is what we did a few weeks ago and coming into this week, and now we're starting to deploy cash. So I think it's very prudent for investors to have dry powder in very uncertain times. Because, as bullish as we are, we still know we're not out of the woods here until we get through the Fed meeting. Because, again, no one knows what he's going to say, but I believe the probability of him being more hawkish than what the market wants is probably pretty high based on his past press conferences and their unwillingness to kind of throw out that 2% inflation number that they continue to hang their hat on. So I think having dry powder next week is prudent.
So, Eddie, with this volatility that we've seen in recent weeks and this choppiness that you say likely will continue at least through the meeting next week, what have you been looking at for your clients?
So we did buy IBIT, which is an ETF that tracks Bitcoin. We bought that this week. We bought the open on Monday when it was down. We increased our position to the SPY. We want to have that as a core position. We also bought financials this week as well too. XLF was the ETF we bought in a downward trending market environment for interest rates into an economy that we think is going to accelerate in the first half of next year. Financials should do really, really well. And those that don't have semiconductor exposure, you can look at the SMH as an exposure to get some back into that tech trade. And then lastly, one of the ETFs other one that we own is Granny Shots. That is an ETF that is a high growth strategy. So when you're in a risk-on environment, that's an ETF, in our opinion, that will beat the S&P. So we have a decent position there as well. And then we just look for pullbacks in areas that we like that we'll continue to add, replace, or add to the existing position that we already have.
And Eddie, what's your time horizon on these positions? Are these tactical trades through this potential end-of-year Santa rally, or are these longer-term holds?
So we view the markets quarter over quarter because we think in this environment to try to predict what the market's going to do in a year is impossible. You have to be ready for any of the unexpected events that can happen. And so we look at things quarter by quarter. So we hope when we make a purchase, we hope that we don't have to sell it for 12 months is our goal. But we have time periods where you get some real breakdowns technically and or fundamentally that we don't argue with the math, because if you do, you can really lose a lot of money. So when we get breakdowns, we will sell and don't ask questions.
Well, Eddie, always a pleasure having you on the show. Thanks for being with us today. That's Eddie Ghabour, the owner of Key Advisors Wealth Management.